enlightening session on the overview. I'm Jabir, contractor, the moderator for the session. First of all, let me wish all my professional friends a very happy and a prosperous financial new year, that is 2022-23. And as you all are aware that today we have gathered on this webinar to discuss these two very important and very enriching topics in today's time. One is on the digital asset and other is on the HUF planning. And a quite apt time to get into the deliberation on these subjects in the beginning of the financial year. And that is the reason that is the first session in the new financial year. So just to set a reference to the context regarding the subjects that we have chosen, one is regarding the digital asset. As you know, today digitalization is all across the world. Wherever you see in every aspect and every walk of life, we have digitalization touching our daily walks of life. So as a professional, we need to know the act and the rules drafted by the countries across the globe, including our own country in India, to be aware and to realize and to understand what are the professional opportunities and what is the scope in the practice of a digital era. In fact, I was just doing some study and the research around this digital aspect where I get to know about, there is something like Digital Marketing Act, Digital Service Act being drafted in Europe. We have in our own country, the Ministry of Electronics and Information Technology preparing something called as Digital Sansad to, interconnect the MPs, the Sansad and the citizens. So a lot of digitalization is happening across the world. And so it's all the more necessary we as a professional update ourselves and understand what does this mean, what are the various digital assets, and what do we have for us in future. Just to give you a fact, there are, as per the World Bank report, it says South Asian countries need to focus cohesively action around regulation institution to unlock digital economies. And according to a digital entrepreneurship index, India and Sri Lanka have most developed digital entrepreneurship ecosystem amongst the South Asian countries covered by the index. And what is said is, as a matter of fact, India digital economy is on the track to reach USD 800 billion by 2030. So we can see the opportunities coming up in future for us as a professional. And that is the reason this topic is being deliberated today. So let me, as Chairman Sir has arrived, so let me give a brief profile of our Chairman Sir. Welcome, Dr. Rajkumar Sir, to the session.
Thank you.
Okay, so I will just read out the profile of Dr. Rajkumar Sir.
Jabir ji, I would request you, I will address, there is no need to read the profile.
Okay.
Yeah, thank you, Jabir ji.
Okay, so I will invite you for the welcome remarks, sir.
Thank you, thank you. Good evening, professional colleagues and today's encyclopedias who will be sharing their knowledge with us, Arun and Sachin, and Jabir will be moderating, and tomorrow Sarvina will be moderating and Vijay will be doing that on a future date on 8th. And the very dynamic team of CPEC, Madam Chanda Sukla, Ajit Tiwari, CECL, and other ICA staff. I will take few minutes just to say how to excel in life. One sentence I will speak till I die, that everything happens twice. First in the mind and second time in reality. Unless it will happen here, it will not happen in the reality. Today's webinar, tomorrow's webinar, Sachin is speaking today, Arun is speaking. First, it happened in the mind. We decided a date and then we are meeting today. Sarvina moderating tomorrow, Vijay on 8th. So that is first. Second, Thomas Alva Edison, he has done the maximum invention in the world. and he failed 1000 times. He said, 999 times I came to know that this method do not work. This particular formula do not work. So success is one attempt more. There is a very beautiful YouTube video of Sandeep Maheshwari, Unstoppable. I would strongly recommend every viewer to have a look at it. Second is, suppose, one myth among all of us is, we read first schedule to the Chartered Accountant Act 1949 to pass CA exam, and there are 3 clauses, clause 5, clause 6 and clause 7 in the first schedule. Clause 5 talks about securing the work, clause 6 soliciting the work, and clause 7 talks about advertising the work. But the best way to get the work is to be a speaker, to be writer of a book. The various committees, there are about 60 committees. We pay 500 rupees per page. So it's not very high amount, but it compensates the effort and the learning which we do. So if we write 200 pages and if the committee approves, it is 1 lakh rupees. Now 700 crore is the population of the world, 7 billion. And about 420 crore uses social media without a cost. Facebook, LinkedIn, Insta, Twitter, having a website, making a YouTube channel. I would strongly recommend everyone, including Sachin and Arun, that, go all out aggressive, be a thought leader. This is the concept we want to promulgate for everyone. What is a thought leader? Thought leader is one who is seen and who is heard. So you speak when you first learn, because knowledge has a tendency to flow outward. Like, when I heard about this blockchain technology and digital asset, I kept 3 teachers at 3 different points of time, 1 hour. He started learning, distributed ledger technology and NFT, non-fungible token, and digital asset and how it is created, the mining. And, you do an experiment, invest 1000 rupees, do some transactions on the digital stock exchange. And same thing, when I spoke to Sachin, Hindu undivided family, we are studying when we enrolled for CA exam. Because subsection 31 of section 2 in Income Tax Act says in the definition of person that HUF is one of the entity. Each one of us is a part of, those Hindus, Hindu, Sikh, there are 4 categories, Jain. So it is Hindu undivided family. So husband and wife. So this is a very old concept and old tax planning. So when I was speaking to Sachin, I said still it is not explored 100%. HUF planning will be there till the life is there on the planet. Till subsection 31 of section 2 contains HUF as one of the taxable entity. So for the income tax purpose. So he will be talking on this. Tomorrow we are having one session. I'll be talking on non-financial institutions, non-banking financial institutions. So I invite each one of you. Dr. Ashish is there with us. He is a Central Council member of Institute of Cost and Works Accountants. So he will be speaking on corporate governance in one of the sessions. So there is so much immense opportunities and we want to increase these webinars. Maybe every day we have 2 sessions, because whenever we speak about a client, it is the knowledge first, reasonable knowledge, 50%, 40%. And then I'm happy to see Dr. Ashish, ICMA board, and welcome you to this webinar. So I leave the session to the moderator and to the faculty, because we have all gathered here to listen to them. My job is to put enthusiasm in each one of you that there are immense opportunities. Let IIA come, let anything come in the world. But the mind, nobody can take away, no law can take away. And there are so many opportunities. We have made a list of global opportunities. There are 20 plus opportunities like internal audit, cyber security, CSR. So country, the jurisdiction is not a boundary. There no law applies. It is not India, UK or USA. These are boundaryless areas of opportunities. And within our country, there may be more than 100 areas. So we have to move from accounting, auditing, indirect tax, GST, and direct tax. And then we see the beautiful world where we can render our services. Over to you, Jabir, Arun, and Sachin. And we see that we get a maximum time to the speakers. Thank you.
Thank you, Rajkumar sir. Thank you for your enlightening and enriching welcome remarks, sir. We really appreciate your advice. To carry forward the session, I would like to introduce our speaker, CA Arun Balu, who is going to speak on digital assets. Just to give a brief profile of CA Arun Balu, he is a chartered accountant, 21st rank All India in CA Finals, 4th rank All India in CA Intermediate. He has completed his MBA from Canada. He is a manager in Canada with expertise in services, payments, and digital currencies. He is currently devoting most of his time to developing expertise in central bank digital currency and digital assets infrastructure. In his prior role in Deloitte, Canada, he led teams for the Payment Modernization Initiative. He was chosen as a part of the Leadership Development Program, and he led numerous projects for the bank to implement the latest technology. He has a blend of technology, business, finance, and consulting skills. He was awarded with Country Business Manager Award, Client Excellence Awards. So with this few words and a brief introduction, I would like to invite C. Arun Balu to begin his deliberation and to enlighten us with the subject. Thank you.
Thank you so much, CA Jabir ji, and thank you very much, Dr. Rajkumar ji. So I'll just share my screen first. I hope you can see my screen.
It's coming up.
Okay. Yeah. So I'd like to start with this. I mean, if you see this aptly describes what goes through in my head. So the sad person you can see on the right is me. And generally what people ask whenever we talk about digital assets is, okay, how do we invest in this particular cryptocurrency? How do we make money from this particular asset? But there seems to be limited interest in understanding this space. And that is the objective of my speech today. So fellow chartered accountants, honorable guests, and dear moderators and committee members, a very good afternoon, good evening, and good morning to you all from wherever you are seeing this. My main message here is that the cryptocurrency space is just evolving at this stage, and it is here to stay, and it's going to grow much bigger. And as you mentioned, CA Jabir ji, about opportunity, digital assets is a huge opportunity, and that is something which I want to explain. My objective from this speech is two things. One is I want to provide you with an overview of what happens in digital asset space. And the second thing is, as chartered accountants, what are some of the steps we can take to service this space? So this is my brief agenda and content. So I'm going to talk about digital assets and so what for chartered accountants for about 10 minutes, start with 35 minutes for digital assets, and finally Q&A. At the end, I'll give you a resource booklet which has details on the material you can use to service in this space. So as any chartered accountant, we always start with a disclaimer. So this is just a plain disclaimer. We just to state that this is only for educational purposes and not for any legal or investment advice. If you want to invest in any digital asset, kindly request you to consult an investment advisor for the same. So if I have to start with digital assets, it's very important that we start with the evolution of money for me to explain what has happened. So for that, I need to take you back to the 6000 BC era, when the Mesopotamian tribes, they used barter system for trading. So the Mesopotamian tribes, they had fish, they had vegetables, they had different kinds of fruits, which they exchanged with other tribes for stones, for weapons, for various other things that they didn't have. And the reason that we went from one monetary system to another monetary system is because of some pain points that were there in the current system, or because of certain trigger events which happened. So in the barter system, what happened is that there was no standardized exchange rate. And that's why we went to the next form of monetary instrument, which is objects. So objects were standardized forms of objects which were used as store of wealth. So these were objects like stones. In Africa, they used agari beads. The European settlers, they used seashells, and they were very smart because the seashells, there were various different types of seashells. And the more harder it was to find a seashell, the more value it was ascribed to that particular seashell. And that's how they kind of did trade. But when the large boats came into existence, they harvested large quantities of these seashells. And as general economics goes, when the supply increases, the value decreases. And that's why we went to the next form of monetary instrument, which is gold. Now, gold, even to this date, is still valued or revered as a form of commodity. And it's still accepted in some places as a form of monetary instrument. So, do you know why gold till to date has its value? The reason is scarcity. Even with all the technological advancements that we have in mining, in kind of getting to the core of the earth to get this particular material or this metal, the reason it has value is because it's very difficult to mine. Even with all the technological advancements, we are only able to increase our supply by 1 to 2% in gold. And that's why it's revered as a form of commodity. But it also has its pain points. Like tomorrow, if I want to go buy a piece of land, I cannot go with 100 kilograms of gold in my pocket and buy a piece of land. It's difficult. It's difficult to transport. Portability is difficult. So that's why central banks, governments, realizing this in the 1900s, they moved on to a period called the gold standard, where the central bank said that all you people out there, you have gold. You give it to us and we'll give you notes. And they gave you IOUs in the form of bank notes. Before, in the 1900s, this was called the gold standard, where every note was backed by gold, a gold bullion sitting in the bank vault. And the banks used to issue it, so it was easy for people to transact. This was a fantastic era. In the European times, this was called as La Belle Époque. This is French. In English, this translates to the beautiful era. What this means is that a lot of technological advancements took place, a lot of medical advancements, a lot of artistic advancement took place. The reason is that the value of money was retained. It was difficult to get money. And because it was difficult to get money, the only good projects were funded. And people really realized the value of money. This was a fantastic era, and it was really described in many civilizations that this was really good for human civilization. But a catastrophic event happened in 1940, the World War I. Many countries were fighting amongst each other. Even today, we can see the Russia-Ukraine issue which is going on. But in 1914, what happened is that many countries wanted to fund the war. And because they wanted to fund the war, they needed a lot of money. And what they did is that they went out of the gold standard. And by the mid-1900s, almost 50 nations were out of the gold standards. And banks started printing money without the backing of gold. And there was also fractional reserve system which was established. I'm sure many of you chartered accountants out there will understand what fractional reserve system means. Basically, it means that banks are allowed to lend out money by holding a reserve with the central bank, and thereby they create money as a result, because the lent out money is again brought back into the ecosystem and again lent out. So we are currently in this system of 5 and 6 of money being printed without the backing of gold and e-money, where you can see, like, you have Paytm, you have Ola Money, you have your debit card, you have your credit card, where it is all backed by the central government debt or central government and backed by government debt. Now, in 2008, a financial crisis took place. We must all be aware. And why this happened is because banks started lending out money at very low interest rates to homeowners, to people. They lent out very low interest rate mortgages. And as a result, it became very risky. And the whole system collapsed in 2008. And people lost trust in the government, or people lost trust in the financial institutions. This was a major turning point. And this is the genesis of when digital assets and digital currencies got created. This is when a currency called Bitcoin came into existence. In 2008, an unknown person named Satoshi Nakamoto invented Bitcoin. It is a fantastic monetary instrument, and coming from a chartered accountant to say that Bitcoin is a nice instrument might be surprising, because even when I was discussing about Bitcoin with my friend who is in Canada, and he was saying it's a fantastic monetary instrument and you should definitely try to look at it, it was very surprising for me. But as I deeply researched in this space and got to know what is the real value, I realized that there is a lot of value in this particular asset, and I'll take you through why. So in 2009 is when the Bitcoin became widely prevalent, and now we have almost 15,000 cryptocurrencies in the world. There are so many that we don't even know, because there are private cryptocurrencies as well. And there are almost 500 exchanges, crypto exchanges globally, which allow you to trade or invest in cryptocurrencies. So I'll briefly explain to you what I mean by Bitcoin. So Bitcoin, like, it has been in existence for almost 13 plus years. Many governments try to kill this monetary instrument because they lose control. And Bitcoin, the value lies in Bitcoin because it is a truly trustless monetary instrument. You don't need to trust a bank or a central bank to control this particular asset. Like, for example, if you look at a dollar, the value of dollar depends upon the government. It depends upon how the central bank manages inflation. It depends upon how the government doles out fiscal policies, how the government is able to improve its economy. So it depends upon a number of factors, and people hold trust that the government will do good for them. But in this case, in the case of Bitcoin, you don't need to trust any particular authority. It is completely decentralized. It is very difficult for me to explain this in a short period of time, because Bitcoin in itself would require a 2-hour session to explain in detail. But I'll take you through the main points here. So it's a trustless system. It's known as digital store of wealth. It's debatable there. It's a little bit debatable. It's digital currency for sure. Digital gold, little bit debatable. And it has a controlled inflation rate. So there are only 21 million Bitcoins which are going to be in existence till 2140, date 2140. And every 4 years, the number of new Bitcoins which are released is reducing. Till today, there are about 19 million Bitcoins which are in existence. So in the next 140 odd years, we are going to have about 2 million new Bitcoins which are going to be issued. So you can imagine, like, when we talked about gold, we talked about scarcity and about the new supply of gold coming in. The amount of new Bitcoins which are going to come into existence is going to be very less. And that is one of the reasons why it has so much value. So here, what I have illustrated is a comparison of Bitcoin with gold and fiat currency, which is Indian rupee. Again, this is in no way mean to demean the Indian rupee. This is only as an illustrative purpose to showcase how Bitcoin compares on various traits of money that I have highlighted. So if you look at the rating I have given for Bitcoin, it is high for almost all the traits that money needs to have except one, and that is sovereignty. There is no government backing for Bitcoin till about last year. In September 2021, El Salvador declared Bitcoin to be legal tender, and it is still today considered legal tender there, but it is not accepted as legal tender in any other country so far. So I'll just explain some of the main items here. So portability. It's easy to send Bitcoin from one person to another. It does not decay or decompose. It is highly divisible. One Bitcoin can be broken down into 100 million pieces. So that's why it is very, very divisible, even more divisible than actual fiat money, because you can imagine number of decimals you can put for a Bitcoin. It is easily transactable and it is scarce. Like, there are only 21 million Bitcoins going to be in existence. So you can imagine, like, if there is a scarce commodity, the value should rise over a period of time. And it is completely decentralized. You don't need to trust one particular authority to manage your asset. And lastly, I'd like to leave you with one point, which is programmability, which talks about how you can program money to do certain functions. So this is the entire gamut of the digital asset space. So what I've talked to you about is only one part of the digital asset space. There are so many other aspects in this space. Broadly, we can break this up into three main buckets: virtual currency, non-fiat, tokens, non-currency, and central bank digital currency. So what do I mean by virtual currency, non-fiat? These basically have currency-like properties. So they're used for payments or as store of wealth. In that, we have three types. One is commodity-like. So commodity-like means they behave similar to gold or silver. In the case of Bitcoin, it is known as digital gold because it is considered to have store of value like properties. Like, for example, why do you hold investment in gold? Like, you hold gold bonds. The reason is that you want to protect it against inflation. If there is a recessionary trend, people want to transition their money to gold. Similarly, Bitcoin is going to ultimately achieve that particular state, and that's why it's considered digital gold by some. Ethereum is considered digital oil, and it has its own reasons why it is considered digital oil. There are a number of smart contracts which are based on it. That's why it is considered commodity-like. The second type is stable coins. So stable coins is very simple. It's similar to how you have Paytm money, Ola money. So one Paytm money that you see in your wallet is similar to one INR rupee. Stable coin has the same thing. It is like one value of that token has a backing of a asset, and that could be USD. So for example, US Tether, one USD Tether means that it is equivalent to one USD. That's what stable coin means. Security. See, there is a reason why certain currencies, even though they have like properties of currencies, they are classified as security. This is very important to know, and even as chartered accountants, very important for us to know is that these currencies need to follow securities legislation. And because they need to follow securities legislation, there are a number of compliance aspects that they need to deal with. Any new coin issuer, like if he wants to issue a new coin, he does not want to fall in this bucket because there are a lot of compliance issues that he needs to deal with. But regulators have a 4-step principle to arrive at whether it is security, and this is not clearly defined in India. SEBI has a blanket rule for security-like properties for assets, but in Canada and North America, they have an investment contract rule where they say that there is an investment of money in a common enterprise to come significantly from the effort of others with the expectation of profit. That means it is a security currency. And generally, these are like privately backed currencies which have a private organization backing them, and that's why they are classified as security currencies. Now, moving on to the second bucket, which is tokens, non-currencies. So I'd like to start with, so these are basically don't have like currency-like properties. They're not used for payments. They're not used for store of wealth or anything like that, but they are for certain other purposes. So I'd like to start with security. Security is similar to how you hold a Reliance share in a demat account. You can also hold a security like a Reliance share as a token, as a crypto token. And once you hold a Reliance share as a crypto token, then you can transact with it 24/7. These exchanges, crypto exchanges never sleep. They operate 24/7. So for example, Tesla is given as a security token in Luxembourg, in Germany, in certain parts in Europe, where you can hold Tesla shares as a security, as a crypto token. Now, there are also utility tokens. Utility tokens are like tokens you hold to get access to a music video or a particular, real movie. You can get access to certain things by holding those tokens. So they are called utility tokens. They are used to perform certain functions. Non-fungible token, as Dr. Rajkumar explained, like this is a big ocean in itself and it requires time to explain. But for me to get into further details, I'd like to explain to you with an analogy. I mean, you all may know Facebook, Instagram, LinkedIn, and in that you may be receiving like images or art. Now, these images are being created by somebody, or these are photos which are created by somebody. But are the content creators compensated for the hard work they put to create that particular image? No. The reason is that there exists no technology for that. Non-fungible tokens can enable that technology. So for example, tomorrow you see a particular art form in your phone, Facebook will have to pay the person who owns the NFT token, the particular person who owns that particular image, and he will get compensated. So that is a use case which is very prevalent, or which is going to be predominantly available in NFT, or which can be enabled by the NFT tokens. So primarily NFT tokens are for art. So what happens these days is that an artist, he draws a piece of art, he takes a photo of it, and he stores the high quality image of it as a crypto token, and it's called a non-fungible token. And he burns the art form, and it's completely gone. And the person who owns that, who buys that NFT token, gets access to that particular art form. And why is it called non-fungible? What is this non-fungibility? Fungibility means that one and one are same. Like for example, you see twins, they are same. If you see one 10 rupee note and another 10 rupee note, they are the same because they hold the same value. They are considered to be the same. Non-fungible token means that they are different. Each token has a different value. It has a different look and feel. Like, so one Ravi Verma painting may not be the same as another Ravi Verma painting because it's drawn at different times. It uses different brush strokes. It is drawn on different canvas. So that's what non-fungible tokens is about briefly. Hybrid is others. They generally are have multiple attributes of different forms of tokens. So they're lastly, I'd like to go to central bank digital currencies. This is my pet topic. I like to specialize in this area. So this is like a currency which is backed by the central government. And very recently, in our budget, Ms. Nirmala Sitharaman announced that by year 2023, we are going to receive an Indian central bank digital currency. This is not going to be like Bitcoin or Ethereum or any other cryptocurrency. It's similar to INR. One digital rupee CBDC will be equal to one INR value in value. And there is a lot of value ascribed to this, or there are a lot of use cases ascribed to this, and I'll take you through those later. But basically, you should remember that there are three currencies, central bank digital currencies, in existence at this point of time. So I've spoken to you about all these digital currencies, and let us talk about the value, because we all love numbers. And the total market cap as of today, when I looked at it, is $2 trillion. And $1.2 trillion is ascribed to the first two, which is Bitcoin and Ethereum alone. They hold 55% of the total market cap of this entire space. So if there are only two things that you need to learn about this space, I would urge you to learn about Bitcoin and Ethereum. The remaining you can focus on later, because those are the two main cryptocurrencies that you must be aware about. I don't know how much of you are investors in cryptocurrencies, but if you know that this space is very volatile. In November 2021, this $2 trillion was at $2.8 trillion. I don't know how much of you exited at the right point of time, but I didn't. But I hope you did the right choice by exiting. So here, what I want to talk about is the ecosystem. So how does this digital asset ecosystem look like? And as chartered accountants, how we should view this ecosystem. So because it's not just simple as you buying it from a user buying it from a crypto exchange and him holding the asset. There are a number of people who enable this ecosystem. I'd like to start with the regulators. And before I go ahead, you can see a green dot and a blue dot against each of these players. An incumbent player means they have been in existence for some period of time, and blue dot, this is emerging, means that they are currently emerging. So these are new things which are going to happen. And as chartered accountants, we can play in both spaces. So first, starting with regulators, there are a number of regulators in this space. I'll quickly go through this, just considering lack of time. Finance Ministry will deal with with legitimizing the asset. Reserve Bank of India, for example, digital currency, they had to change the act to say that digital Indian rupee is considered as a legal tender. The income tax department is to do with the taxation. Now they have announced it for the direct tax. We are yet to hear for indirect tax. Securities Exchange Board is very important. As I mentioned to you, some of the cryptocurrencies, they operate as a security token, and we would need the Securities Exchange Board to play a major role here to inform investors how to invest in this space, and to make sure that the people who are providing these assets or these currencies to the users, give the right information. For example, they may need to issue a prospectus, or they may need to issue information on the risk of the particular asset. So those are certain things that the Security Exchange Board may need to regulate. Financial Intelligence Unit of India is concerned with how to take care of illicit trading, terrorism financing with regard to crypto assets. And finally, Ministry of Corporate Affairs, they tell us how to showcase these assets in the balance sheet, because very soon, even companies looking at the volatile nature of the space, they may start to invest in cryptocurrencies and crypto assets. And Ministry of Corporate Affairs has already released a note on how companies need to show this in their balance sheet. Next, I'd like to talk about digital asset market enablers. As Dr. Rajkumar pointed out, there are miners which exist in this place, and you must be very well aware of this space. But miners are basically, they create these cryptocurrencies, they create these assets, and they bring them into the ecosystem. Now, I can talk about this separately. If anyone wants to know, please let me know in the question answer section, and I'll explain more detail about what miners are about. Crypto exchanges are places where you can go and buy the crypto assets from. Liquidity providers, banks and fintech. So Paytm and your HDFC Bank will provide you the fiat currency to go and buy it from the crypto exchange. Investors, retail, me and you are considered retail. Corporates are very soon going to enter this place, and institutional clients. So in Canada, we have exchange traded funds which are available, where they are mutual funds, and the asset which is held in the background is a cryptocurrency. There are securitized offerings which also may come up in India, like derivative products, exchange traded funds, and mutual funds. Then we have value-added service providers. Number of different value-added service providers exist in the centralized space and the decentralized space. What do we mean by decentralized? Decentralized means that there is no central authority monitoring it. It's completely, there are hundreds, millions of people kind of controlling it. There is a law which is ascribed to say that this is how it is going to function, and people abide by that. Centralized financial institution means that there is a centralized authority managing it. Like, for example, if you go to India, then there is a crypto exchange called ZPay. That's a centralized financial institution. But there exist decentralized crypto exchanges where there is no central body and it's completely decentralized. You can buy and exchange cryptocurrency. So though there are two major types there, and there are a number of value-added service providers here. So we need to talk about insurance. How do you protect the asset? We need to talk about, do you know that you can get a loan by giving your cryptocurrency? In Canada, you can get a home loan by giving your cryptocurrency as a collateral. Do you know that you can earn interest on your cryptocurrency? Like, you can give your cryptocurrency to earn fixed deposit interest. Do you know that you can lease? Like, for example, staking is when you can give your cryptocurrency to someone else, and they use it for such purpose and give it back to you. And you can earn an average return of 6 to 8%. Similarly, for fixed deposit interest, you can earn anywhere between 3 to 14, 16, 19% interest. Loans are offered between 12 to 18% interest. So there are a number of value-added service providers which exist in this space. Then I'd like to go on to custodians. So in Canada, like a crypto exchange, there was a big scam which took place. The name of the firm is Quadriga CX. The owner of that exchange, he came to India and he mysteriously died. And with him, he took the tokens of all the customers. $600 million was lost. There is a saying in the crypto world, not your keys, not your coins. So if you hold your assets in a crypto exchange, it's extremely risky because you don't hold the keys. Now, there are two ways you can hold your keys broadly. I hold my keys, like I hold my assets in this. I hope you can see this. This is a pen drive. And it basically is a device where you can send your cryptocurrency to, so it's completely kept offline. You don't need to keep it in an online system, so you can prevent any form of hack, and you can put it in your pocket and take it to anywhere you want. There are also third-party crypto custodians who are like, they are trusted authorities, and they are prevalent in USA and Canada, and very soon I think going to come to India, because India is a huge market, and I'm going to take you through why. These are people like big banks who are trusted names that hold the asset, and they give you a certificate authority to say that, yeah, this person holds assets in my institution. And they have really robust servers and data centers to hold assets. So they're very safe. They are safe from hackers, and they hold it in a cold storage, which means that they're completely held offline. So no hacker can kind of take your assets. And finally, technology providers. I mean, there are a number of technology providers who need to enable this entire space. So we can talk about custody, infrastructure, AML, KYC. There are a number of technology players that need to play a role. So I'll talk about the recent trends. Broadly, there are three reasons. One is the blockchain platform market size. This was a research done by ARK Investment. They said that in 2020, it was $1.4 trillion. By 2030, it's going to grow to $49 trillion. That's a CAGR, that's a compound annual growth rate of 43%. That is massive. That's what they have predicted. Next is about interest levels in digital currency. This was research done by, or a survey done by Gartner, a world-leading organization. They did it for 251 global CFOs, and 47% of them said that they have an interest in digital currencies and they are looking to position their business in this space. I'll talk about Indian market stats. 100 million crypto users in India. Can you believe that? It's a big market. It's the number one in the world. The second biggest country is USA with 27 million. So you can imagine how big India is for the digital asset marketplace. And that's why I guess Indian government, realizing that there is a lot of opportunity here, decided to regulate this space by introducing taxation. 641% growth in the number of users in a matter of 1 year, in 2020 to 2021. Huge. It's second. It is a world second in terms of fastest adoption. The first one was Vietnam. I'm not sure why Vietnam was so high, but in the world, it's the number 2 in terms of fastest cryptocurrency adoption. Now, here, it's not only retail consumers that are in this space. There are also corporations and even countries who are looking at this space. So I'd like to talk about some corporations which have invested in cryptocurrencies. Tesla owns 43,200 Bitcoins, totaling to $1.7 billion on their balance sheet. MicroStrategy, another firm in US, 125,000 Bitcoins. Square, a payments company in US, 8,000 Bitcoins. KPMG Canada, a big auditing firm, they own an undisclosed amount of Bitcoin and Ethereum. They also recently bought an NFT, a non-fungible token of World of Women for $73,000. So I'm just talking about some of the main corporations. There are so many others which are publicly listed and declared them in the balance sheet. Now, I'll talk about countries. El Salvador, as I mentioned, in September 2021, declared Bitcoin to be legal tender. So it's similar to currency in El Salvador. Their population is about 7 million. 50% of them own a Bitcoin wallet. Massive adoption, and half of that, so 7 million population, 3.5 million own a Bitcoin wallet, only 1.7 million have a bank account. So there are more Bitcoin wallet owners than actually bank account owners. A number of companies have started accepting Bitcoin as payment. You can see the list here. This is primarily in USA, and yet to evolve into different places. But there are companies which are accepting Bitcoin as payment. Visa, MasterCard, PayPal, Square, these are all big payments companies. They have also started to endorse cryptocurrencies, where they said that you can transact, you can pay in Bitcoin, you can send money from one person to another in Bitcoin or Ethereum or whatever cryptocurrency you want. Also, you can, like PayPal allows you to buy and sell Bitcoin in their crypto exchange. Now, I'll talk about some of the financial institutions which are beginning to embrace digital currency. Since we are lack of time, I'd like to talk only about the important points here. Starting with USA. USA is one of the most friendly countries in terms of digital currencies and digital assets. They have crypto-friendly banks like Silvergate, which want clients. It's very difficult for a crypto firm to get a bank account these days because of the compliance risk which banks have. Suddenly, banks cut off crypto firms as clients because of the compliance risks that you need to deal with. Canada has crypto ETF products. It's the number 1 in the world, which started, the pioneer in the world, which started crypto exchange traded funded products, and it's doing extremely well. In Singapore, they want to be the global cryptocurrency hub in the world. Europe, they want to launch a central bank digital currency called the digital euro. They've already launched a 5-year project and they're very strategic about what they want to do. So I'll go on to central bank digital currencies. So what is a central bank digital currency? I mean, even to me, who has been in this space a lot, it has really baffled my mind. Isn't money already digital? What are we still talking about digital currency and central bank digital? Why should the Reserve Bank of India launch a central bank digital currency? There are a number of reasons. So currently, if you look at it, there are only 2 forms of Reserve Bank money. One is cash, which you hold in your pocket, and the second one is reserve, which a financial institution can hold a reserve with the central bank. So there are only 2 forms of Reserve Bank issued currencies. The third form of currency is called central bank digital currency, and this is what a retail consumer can hold. So what you can see on your left is the present, where we have cash, we have checks, we have electronic money, we have cryptocurrency, central bank reserves, cards, electronic fund transfer. In the future, what is going to happen? Everything is going to remain the same. We are also going to have one more form of monetary instrument that's going to be called central bank digital currency. Now, this is a map of what's happening in the world with regard to central bank digital currency. You can see various colors. There are a number of different colors ascribed to it. 9 countries have launched a central bank digital currency today. That's the Bahamas, 7 countries in the ECCB, and Nigeria. So, apart from that, there are 3 stages to how a country comes to adopt a central bank digital. It starts with research, then it goes on to development, and then finally pilot. India is in the development stage, and similarly is Canada. And if you look at China, they are in the pilot stage. They have been doing a massive job on central bank digital currency for the last 5 years. They are already leading in terms of payments in the world. In their pilot, they already have 261 million users. $14 billion in transactions have already been done for central bank digital currencies in China. So it is a huge phenomenon which is taking place in China. And China, even though it has a vibrant payment ecosystem with WeChat and Alipay, in China, if you go to WeChat, you can do everything from chatting to social media to buying to selling. You can name it, you can do it. And even Alipay, you can do everything. But still, with such a vibrant ecosystem, the government decided that they wanted to go for a central bank digital currency because there are certain functions that the existing payment ecosystem cannot do. And that's why they wanted to evolve into the new central bank digital currency ecosystem. So one thing which I'd like to say is that 86% of the world nations are looking at this space, amounting to 90% of the world's GDP. And the Digital India Rupee is going to be launched by 2023. So there are a number of benefits for central bank digital currency. Very difficult for me to go in detail for all the points, but I'd like to talk about 3 major points. One is financial inclusion, because a person without a bank account can tomorrow open an app on his phone, download the app and get access to money on his phone. So it enables financial inclusion. It enables a resilient and cheap or cost-effective financial ecosystem. So, I mean, India are known for the way we operate. We are very frugal in the way we operate. Like ISRO, in the world renowned, even Elon Musk appreciated the way how we were able to launch a rocket into space for such a cost-effective price. So it will dramatically bring down the value or the cost of payments. Third one is targeted fiscal programs. If you have heard in US, what happened during the COVID crisis is that the government wanted to send money to the consumers, but it took 30 days for a person to receive that fiscal benefit. Why? Because they had to route it through banks. And what a central bank digital currency will help us do is send money directly from the government account directly into the person's account. So that is something about central bank digital currency. I'll talk briefly about regulation. So there are a number of things which we need to talk about in regulations. A lot needs to be done in this space, and that's why I believe we as chartered accountants are well positioned to talk about this or play a major role in helping our regulators understand this space and look at especially risk. Because when we talk about cryptocurrencies, there is a lot of risks that need to be, we need to kind of bring it into the front, and so that our regulators are aware of the risk. So one is securities legislation, which I already spoke about. Direct tax is currently we have a direct tax legislation which has come out. Indirect tax is yet to come out. Investor regulations, more needs to come out there. custody needs to come out. We need qualified custodians in India, which is where we have a trusted body holding these assets. AML KYC needs to evolve. Transaction monitoring needs to be more robust in terms of the way we monitor digital asset transactions. And finally, corporate regulations. How do we value these assets? How do we show them in our balance sheet? That also needs to be clearly showcased. Taxation, I don't want to go into too much detail. One of our colleagues already has described about this in detail. So basically what has happened in the Act is that they have defined what is digital asset. They have told that digital asset is to be taxed at 30%. There are certain exemption criteria. Then there is TDS at 1%, which is on digital assets. And then finally, gift of digital assets is also taxed. The YouTube link to this video, it's a very nice video. I'll send it in my resource brochure, which I'll give it in the end. So just to summarize what I've spoken about is the digital assets, the key trends which are happening, the CBDC space, the key regulations. The digital asset space is a vibrant space. And as you can see in India, there are 100 million users. So this space is definitely growing and 641% growth. It's a vibrant space. There is value in this space. Central bank digital currency, the Digital India Rupee, is going to be launched by 2023. And 86% of the nations are looking to central bank digital currencies, which is very soon going to happen. Regulatory space needs to evolve, but I believe that the taxation which came out recently is a move in the right direction. With that, I'd say I'll go on to the so what. So what is in it for the chartered accountant? I'd like to start with like a meme. I found this really funny. So when the crypto asset was going to be legalized in India, everyone was happy. But when the taxation at 30% was announced, their face turned. My face at least changed to becoming a little bit sad. But still, it's a move in the right direction. With that, what are the broad two types? Ever since we cleared CA, there are only two parts a chartered accountant can take. It is either he goes in the industry and he does work, or he practices. So that's how I broadly classified these two. There are some services that we can do, and these are standard services that any audit firm will offer. And there are some career opportunities which exist in this space. So as you note, first I'd like to start with auditing. There are more than 1,000 cryptocurrencies, like 15,000 cryptocurrencies which are there in the ecosystem. So broadly, we can classify companies into two types. Crypto operating companies. So these are companies like crypto exchanges, crypto custodians, whose main business revolves around cryptocurrencies. And companies that invest in cryptocurrencies. So that's the second bucket. And broadly, we have external audit and internal audit. So I'll talk about the main points which are bolded here. So we need to talk about valuation. Like when we go and service this place, we need to know how we are going to value these cryptocurrencies in the industry, if they're held as inventory, how we are going to declare or disclose these assets in the financial statement, because these are risky investments. And as shareholders, people who are reading or stakeholders who are reading the financials need to be aware that these are risky assets, and the correct information needs to come out in the balance sheet. Then we are talking about internal audit within crypto operating companies. We need to look at a number of risks. There are crypto risks, technology risks, cybersecurity risks, and we need to know how to evaluate these risks. Then there is applicability of various standards. So whenever we talk about crypto operating companies, the SOC 2 compliance is very important, because any company which is SOC 2 compliant is considered to be very good in this industry, and you get a lot of users. Now I'll go into crypto investing companies. So these are companies which invest in this space. So these are companies like Tesla, MicroStrategy, Square, who have cryptocurrency in their balance sheet. As auditors, what do we need to be looking at? How do we recognize crypto trading income? What is the tax applicability? How do we value these assets in the balance sheet? So these are some of the items that we need to be aware about. And then what is the investment policy? Because this is not the same as traditional finance. This is not the same as how you buy a stock on a stock exchange or a demat account. It's very, very different. And even the asset you hold is not the same. It is prone to hack. It's prone to getting stolen, prone to fraud. There are a number of different frauds which exist. There are rug pulls which exist. So you need to have strong internal controls for this. And I think we as chartered accountants, once we understand this space, we'll be able to provide the right information to our clients as to how to protect their assets if they start to invest in this space. Now, the next big category is consulting, and there are a number of areas. Here is a very complicated slide, and I'd like to talk about a story here. So we did a project for a crypto exchange, and they wanted to launch a crypto exchange. And how we went about doing it is, first we looked at the market. We said that, okay, is this a big market? What does the entire value chain look like? Who are the major players in this space? What does the competitive landscape look like? Who are the major competitors? Does it even make sense to come into the market now? What are the various tokens that you're going to release? So we basically did a market analysis. Then we looked at the business model. There are two types you can do business model. Either you offer a value offering or you be a cost leader. So I'm sure as chartered accountants, you must have done this business model. Basically, we look at revenue and cost here. Then we did risk assessment. We looked at the various types of risks that a crypto exchange can have. For example, there will be technology related risks. Somebody can hack the crypto exchange. How do we mitigate it? So there is a custodian you can hold. There is a cold storage you can have. You can hold your assets, limited assets in the hot wallet. Hot wallet means that these are assets on the online system. So there are a number of other risks that we need to evaluate in the risk assessment phase. And finally is a target operating model. Target operating model was a 100-page booklet that we gave the company. It's a detailed blueprint of what the company needs to do to build or to establish this company. And it starts from an operating framework to a go-to-market strategy, to what the talent they need to acquire, to how the corporate structure needs to be set up, how the funding needs to be established. So we established a complete target operating model. Below in the blue boxes, I have showcased what we as chartered accountants need to know to service this particular space. Financial advisory, number of financial advisory options which are available. Basically, you can either provide it for crypto firms, for new tokens which are going to be launched, for exchange traded funds and mutual funds which need to be established, and also investment related advice. And for this, what you need to know is that you need to track this space very carefully. You need data backed advice, because there is so much information available out there, but clients need something which is data backed and which comes from credible sources. So tracking the news every day. So for example, I have a regiment every day that 1 hour I track the news. I look at how the geopolitical events is affecting digital asset market. I look at the digital asset market space news. And you also need to look at macro and microeconomic factors such as interest rate, inflation, consumer sentiment to see how they affect this digital asset market. Taxation broadly is direct taxes, indirect taxation. But even to provide advice on the taxation space, you need to understand the digital asset space, because there are a number of different transactions you can do in this space. And it's huge in terms of the opportunities which exist and the different ways in a way a client can transact in the space. So only if you are aware of how the space operates can we give a proper advice or proper taxation advice to our clients. Finally, I go into the tools. So there are a number of tools we use to track this space. One is a stock to flow model, which is a Bitcoin model that we use for valuation. So people generally ask, okay, now Bitcoin, it doesn't have any intrinsic value. It doesn't have any government backing. How do you value this asset? There exists a solution. The most predominant one is stock to flow model. In my resources, I'll share you the sources for this. So stock to flow model is basically a commodity based pricing model that they use to find the value of any asset. Basically, it says that for the value of the stock of assets which exist in the world divided by the total flow of assets in that particular year, and that with that ratio, you can ascribe a value to it. And you can go through the details in my notes. Glassnodes is another on-chain market intelligence platform where you can use to provide data-backed advice. Hash rate index, if you're doing any service for the mining industry, that is crypto mining industry, hash rate index is going to be extremely useful. This is a brief about the stock to flow model, which I have basically described. These are various other sources, tools, and sources that we use. If I have to leave you with one book that you could read to understand this space, it is The Bitcoin Standard by Saifedean Ammous. It's a fantastic book. It's also a book that I've given in my resources booklet, which I'll be sharing you at the end. So just to summarize, the major topics that we covered, what I'd like to state is that the audit industry, we are going to have a lot more specialized knowledge that we need to gain to kind of provide service in this space. There requires a deep understanding of the digital asset space to provide data-backed consulting advice. People in the industry are requiring consultants in this space who can advise them as to what to do next, because this space is constantly evolving and you need to track the market closely to give advice in this space. Taxation, fantastic job by introducing taxation, but this space would still need to evolve in terms of taxation. Indirect tax needs to come out very soon. Maybe that will come out. And also leveraging existing tools. I'm going to share some of the tools which I found useful. And by using such tools, we can definitely provide service in this space. So I'd like to end with a quote. The window of opportunity exists. Don't pull down the shade, by Tom Peters. I think aptly brings a close to my speech. I'd just like to end with a thank you note. Thank you, fellow chartered accountants, associate chartered accountants, honorable guests. Thank you, Dr. C.A. Rajkumar, for providing this opportunity. Hans Raj Chuk, Vice Chairman, CCLA, for providing me this opportunity. C.A. Jabir, contractor, for moderating the session and talking to me and advising me on how we can moderate the session. C.A. M.B. Sridharan, for introducing me to the chartered accountant community. C.A. P.S. Balasubramaniam, who is my dad, my mentor, my role model. MCA Chanda Shuklaji, I asked Chanda Shuklaji a lot of questions. I hope I didn't bother you too much, but she was very patient in providing me support. And some people from my Block Zero team who are my mentors, Laurent Ferral, Pearson, Marie Chantal Lodak, who are in Canada. Similarly, Kashyap Anand and Sabrina McNeil, who are also in Canada, who made this presentation. And finally, Yash, the technical support team, for providing us a platform to conduct this session. I provide my contact details in above, and also Ms. Chanda Shuklaji, please release that resource booklet to the members so that they can get access to all the tools. Now I'd like to hand it off to C.A. Jabir for questions.
Thank you very much, Arun. It was really an enlightening and a very long session, I must say, with a lot of inputs and a lot of information on the digital assets. As regards question, Arun, there are quite a few questions that have come up, but I would club them together so that due to the paucity of time, I will just pause you a few questions which I feel are a bit important from the angle of the subject. So one of the questions is, what is the underlying asset for the crypto to get its value?
This is a question I always get asked. So there are different types of assets. Okay. And in my resource booklet, there is one resource called the Crypto Playbook by Roas Nagpal, and he has gone into depth as to how to value an asset in the crypto space. You can use that, but there are a number of methods that exist. So now I'd like to go into only one, which is the stock to flow model for Bitcoin, because if you look at the entire space, Bitcoin is one of the most holds about $800 billion in market cap, right? So the stock to flow model basically describes the value to this. So there is no underlying. So if you look at underlying value, if you hold an asset and you have to trust the owners, like for example, you own Reliance shares, right? You trust the management to conduct business in certain way for the value of the asset to grow. Similarly, in the case of Bitcoin, the value is opposite, because there is no body you need to trust, and because this particular asset has so much use cases, like it can you can transact and make payments with it in a trustless manner. That's where lies its value. So if you look at intrinsic value, we have to look at the miners. There are millions of dollars invested in miners. So miners are these pieces of equipment which are used to mine or to validate these transactions. So if you have to look at the real underlying assets for these Bitcoins, it will be these miners. So there are valuation models which are done with these miners as well, but I don't want to cloud you with all that information. What I'd like to talk about intrinsic value is that in most cases, the intrinsic value may not be there unless it is a company. Like, for example, you have a company launching a cryptocurrency, then intrinsic value. So, for example, you have Ripple, which has launched its own form of cryptocurrency. Then you have a private organization which is launching a cryptocurrency. And then you have to look at their revenue model. You have to look at their management. You have to look at how they have launched, what does their prospectus look like. You have to look at their business model. You have to look at their revenue model. So there is an intrinsic value there. But for like currencies like Ethereum and Bitcoin, which are trustless. Like I would like to talk only about Bitcoin, which is trustless because there is no private organization backing it. You can't, it is very difficult for you to look at intrinsic value because you may not be able to find it. And the answer to your question is explained in detail in that book, The Bitcoin Standard by Saifedean and Amos. And it goes into detail about what intrinsic value is about.
Okay. And one last question, Arun. This is again related to, they want to know about the mining.
Mining. Okay, yeah. Perfect. So I'd like to show a slide on mining and take you through how a business model works for mining. It's actually very simple, and for a chartered accountant, you may very easily understand how it works. So this is what takes place in a Bitcoin mining farm. So you have electricity, you get one. First thing you need to get is power. You source power. You have to step down the power using an electric substation. Okay. I'm not going to go into technical details as to what is mining because that is not required. I'm going to look at only from a business perspective. You step down the power, then you mine Bitcoins. Basically, you have these mining rigs which you connect this power to, and these generate Bitcoins, right? And once you connect them to electricity power, they generate Bitcoins. And then once these Bitcoins are generated, either you sell them in the exchange to run operations, you need to sell some Bitcoins, or you can hold them and keep them as coins in the hope that their value will increase in the future. So this is a snapshot of what a Bitcoin mining farm is. And to look at the business model of a Bitcoin mining farm, just look at the left bottom corner for the business model of a Bitcoin mining farm. Basically, revenue minus cost should give you profit, right? So what is revenue in terms of a Bitcoin mining farm? It is the amount of processing power that you have divided by the total global mining power. So for example, you have a 1.4 gigahertz computer, which is the processing power of your computer. Now that one you divide by all the computers which are mining Bitcoin, that will be your market share. Now that market share, you have to multiply by the Bitcoin price, which is currently at 48,000, and multiply by the number of Bitcoins which are issued at reward every year, every block of 4 years. In this case, in this block of 4 years, it is changed now to 3.125. My slide is a little bit old. I put it as 6.25. You multiply by 6.25 and there will be 52,560 blocks which are released per year. So we get the total revenue. We minus the cost. What are the costs? So I'll go back to this slide. So we need to look at the price of these mining rigs which are there. Then we also need to look at electricity cost. The biggest cost of a Bitcoin mining farm is the electricity cost, because that is going to be a key determinant of where a Bitcoin mining farm can be established. It has to be less than 5 cents per kilowatt hour. Then only it will be profitable. Like, I mean, it's just that it will be more profitable if it is less than 5 cents per kilowatt hour as compared to the market. And then finally, you have admin and other operation expenses. This is how you get, this is a basic understanding of what is a Bitcoin mining farm.
Thank you very much, Arun. Thanks a lot for giving a reply to the questions, because I have clubbed them into the paucity of time. I have not been able to take all the questions, but the main ones, I think you have answered them, and I hope with the satisfaction of all our participants. So Arun, I would give you a hearty vote of thanks for giving the lighting session, and we are really, gain a good insight into the Bitcoins and about the digital assets. And we, hope and pray that the future is bright for us as chartered accountant in this area of practice. Just hope and pray. Thank you. Thank you very much, Arun. Thank you for your deliberation.
Thank you. Thank you.
So friends, now
just want to check if CH Chanda Chukla ji released the note, the resource book.
Yes, sir. We have placed the PDF so that the participant can download. So it has been done. Okay.
Thank you so much. Thank you, CA Jabir ji. Thank you.
Thank you. Thank you. Okay, friends. Moving on to our second topic for the day, that is HUF tax planning in professional opportunities. We have got the expert speaker, CA Sachin Sinha, with us. So before he starts his deliberation, I would just like to give a brief introduction about himself. He is a fellow member of the ICAI, having 20 years of experience, certified international taxation and transfer pricing, auditing and taxation of non-profit organization, concurrent audit of banks, forensic audit, and fraud detection. He has in-hand experience of taxation, domestic and international taxation, and management consultancy. He has developed himself in the advisory and the litigation and handling other commercial issues. He has deliberated in around 300 seminars and webinars so far on the topic of domestic and international taxation, and written many articles on the same subject for various knowledge portals, including taxman.com. He is a member of the study group of Direct Tax Committee and International Tax Committee of ICAI. He is a visiting faculty of ICAI to deliberate on the subject of international taxation. He has authored books for ICAI on the topics of tax audit, the basics of permanent establishment, handbook on issue of 15CA and 15CB. With this brief introduction, I would like to invite CA Sachin Sinha to begin his deliberation and to enlighten us on the subject of HUF tax planning and the opportunities. Over to you, CA Sachin Sinha.
Thank you, Jagbir sir. I am very much thankful to the committee for giving me this opportunity. First of all, I'd like to thank Adukia sir, who is mentor and the committee chairman, Ancestral sir, non-absentia. So in his absentia, he is our vice chairman, and Jagbir sir, as you moderated the first session, it was really excellent. And the presentation given by my co-speaker, that was really a mind-blowing. And I think from today, most of the chartered accountants will start practicing in Bitcoin and digital asset also. So starting with my topic. So when doctors have called me about this topic, the first thing which came to my mind that this is not a very important topic, I must say, but the challenge which is given to me by the Dr. Sahab, he said that you have to give the presentation in such a manner so that from 1st April onwards, people start thinking about the HUF. So I also started reading about the HUF, and the first thing which came to my mind that, okay, let's start working on HUF. And I did a small survey on around 30-40 chartered accountants by saying, okay, have you heard the term HUF? So everybody says, yes, we have heard that term HUF. So I said, okay, what is it? So they said Hindu undivided family. So I said, okay, this is the term, this is basically the abbreviation. So what is actually the meaning of the term Hindu undivided family? So it is shocking to get a very little answer, a very less answer from the survey, and that brings to my mind that, okay, this is actually a topic which is given to me. Why Dr. Sir wants to spread this topic, because this is a practice area, but unfortunately, as a chartered accountant, we are not using this as a tool of planning. So let's come to the topic by understanding the term HUF. So as I mentioned that it is Hindu undivided family. So from where this term came and why it is in the place of clause section 2, clause 31. So let's, during my presentation, let's think about a situation where 4 brothers are doing business together and they don't have any agreement to do this business. They are coming to the shop as per their convenience, as per the timing which is given to each one. Out of these 4 brothers, one brother is responsible for marketing, one brother is responsible for collecting the payments, and so on. And since long they are doing this type of business, but there is no formal agreement in it. So whether it is a Hindu undivided family or is it a partnership firm? So I must say, no, it is not a partnership, because for a partnership, there must be an agreement. So partnership deed should be there. The profit sharing ratio would be there. But these things are missing in this type of arrangement. So what is this? So this is actually a Hindu undivided family, because this is not a new scenario in nowadays when the nuclear family is there. But earlier, this was a very common thing when the people are doing business. I want to recall one thing from all the participants. You must have heard or gone through this television. So Saas Bhi Kabhi Bahu Thi. There, so a big family is there, and they all are doing the business together, living together, eating together. So whether this is the basic core of the HUF? Yes, this is the basic core of HUF. Now I've given you 2 examples. One, Saas Bhi Kabhi Bahu Thi, and the second is the 4 brothers. Just keep in mind for whole of the session for these 2 things, and we'll do the taxation and non-taxation. We'll discuss the taxation and non-taxation part, which will rotate in with this circle. So with this background, let me share my presentation and then we'll move on. So is this visible?
Yeah, it's visible.
Okay, thank you, sir. So this is what you can see in my in the slide, first slide, that this is called Hindu undivided family, where a father, brother, their wives, children, and so on. So this is the family. So it is very important to discuss HUF. There must be a family, and that too they are Hindu. So what is the meaning of Hindu and what is the meaning of family, that we will discuss in the subsequent slide. But it is what term which joined to these two terms is undivided. So whether this term is, we are discussing this term, but from where this term came from. So whether it is from any other law. So when you see the Hindu law, the term Hindu undivided family is not there. The term is joint Hindu family. So the joint Hindu family is discussed in detail in Hindu law, but in income tax, they have not used the same term and said that Hindu undivided family, joint Hindu family. They said Hindu undivided family. And while explaining this term, they have not used the definition of this term can be taken from the Hindu law. So they keep it as a vague for the purpose of income tax, and unfortunately it is not defined in income tax law anywhere. So this is one thing. Coming to next. So what is Hindu undivided family, and whether joint family or undivided family, are these two terms are similar or there is some difference? So as I mentioned, of course, the joint family or joint Hindu family is discussed in the Hindu law. However, undivided family is discussed in the income tax law, and that is clause section 2, clause 31. And wherever you read individual, maximum places, individual and HUF came together. So whether can it be considered that individual and HUF are one and same thing? No. For the purpose of income tax, there are two separate person, and one is individual is a separate person, and the second is HUF, that is also a separate person. So can it be used for the purpose of taxation, considered as two different entity? Yes, it can be considered as two different entity for the purpose of taxation. So now a first question came to my mind while doing this: how to create a HUF? So do we really need to create a HUF? To my mind, no. HUF is not required to be created, or joint Hindu family is not required to be created, because it is by birth. The joint Hindu family, basically, constituted by birth, when a person comes into family, either by birth or as a daughter-in-law, they become part of the family. They immediately become the part of that joint Hindu family. Now the question arises, then why we are talking about Hindu undivided family, and how to create this? So for the purpose of doing business, it is not necessary to create anything for the purpose of HUF. But of course, since they're saying that it is a separate legal entity, so it means there must be some creation. So something is required to prove that yes, it has been created. So how it is to be created? So HUF deed is required for the purpose of creation of HUF. Why it is required? So for the purpose of carrying on business, as I given in the first example, that 4 brothers are there, no need to do any documentation for the purpose of carrying on any business. But when you go to bank and say, we 4 are doing this business, and open a bank account, they'll say, okay, give me something that gives authority, or it can be said that yes, this is the constitution of the HUF. So for this purpose, you need a HUF deed, first of all. Second, when you go to for the purpose of income tax, go to obtain a PAN card. Of course, for that purpose also, they want a document that is called HUF deed. And third, when you go for the GST registration, for that purpose also, they want a HUF deed. So this is the background of creation, but we will discuss it subsequently also in detail. Now the question arises, whether HUF is is equivalent to partnership form. As I mentioned in the first example, that 4 brothers, they are doing business, and whether can they be said as a partner? So no, they cannot be said as a partner, because they are working together doesn't mean they are a partner. So for partnership form, there something else is required. So Partnership Act specifically says, or that it excludes HUF carrying on a family business. It means HUF which is carrying on a family business is not a partnership firm. So Section 5 of the Indian Partnership Act specifically says that. So it is very clear that HUF is not a partnership firm, so not equals to. Now we'll move ahead and discuss who is Hindu, what is family. But before this, let me discuss one thing. When we are discussing these things, do not think only for the purpose of Income Tax Act, because while we are discussing what is the purpose of this discussion is what are the planning tools and what are the opportunities for the chartered accountant while doing the practice in this area, or when you advise the client. So let me take a simple example. As you all are aware that HUF is a person as far as concerned to Income Tax Act. Whether HUF is person for the purpose of GST also? So yes, HUF is considered as person for the purpose of GST also. So let's think again that assuming for a person where the 40 lakhs exemption is there while doing business in the same state. So 40 lakhs, up to 40 lakhs, the exemption is there, and you're not required to get yourself registered for the purpose of GST. Can I use a planning tool as use HUF as a planning tool and create a HUF and saying that this is another entity and the 40 lakh exemption should be available to this entity also? So although I'm not doing the practice in GST, but to my mind, yes, this can be done. So you can advise your client accordingly that it is not necessary that you do business as an individual and the 40 lakh limit can be exhausted. So you have another tool, and that can give you, while talking about the opportunities, yes, now you have 2 client, 1+1, and the advisory is required, the compliance is required, and the other things which a consultant can give, that is also required. So that by this you can create your opportunity. But this is one simple example. However, there are so many things in which you can do, you can advise your client. Now come to the moot question. While talking about Hindu and related family, it is very core of the question is what is the meaning of Hindu? Who can be considered as Hindu? Whether a Sikh is also a Hindu, because we generally classify our religion in India in 4 categories, major 4 categories, in Hindu, Muslim, Sikh, and Christians. So whether a Sikh is also Hindu? Yes, Sikh is also Hindu. So whether Christian is also Hindu? No, Christian is not considered as Hindu. What about Muslims? Muslims are not considered as Hindu. So out of these major parts, major 4 categories, Hindu and Sikh are considered as Hindu. Now the question arises whether Jain, Buddhist, or the other religion who are following, whether they are also Hindus. They can be said, yes, the law says they are Hindu. Now one more question arises. If the father is Hindu and the mother is Muslim, and then what is the religion of the son? So the law is very specifically categorized such type of handled such type of situation and said the faith which is being followed in the family is the religion of the person. So assuming a Hindu married with a Muslim and the culture and the faith is being followed in the family is Muslim, then the person is Muslim and not Hindu. So this is very important to understand which faith they are following. Now come to the another term, family, because Hindu undivided family. So family, what you consist that there must be a father, grandfather, great grandfather, and the children's on the male members, female members. This is all considered as family. So of course, when we talk about the family, a singular person cannot be considered as family, because of course more than one person should be there. So the question arises whether the husband and wife can be considered as family. Yes, husband and wife can be considered as family. Now another question came to us. So whether husband and wife can also constitute a HUF? So yes, husband and wife can also constitute HUF. So is it not, it is not, the question came to us again, that is it not necessary to have a big family? So there is no concept of big family, small family. So the family means more than one person, and that too linearly descendant, and the female member can be considered as family, and they can make a HUF. Now the term, as we discussed earlier, that this term is basically borrowed from Hindu law, and that is joint Hindu family. So Hindu is never, as we discussed, when a person born, they become part of the family, or when a marriage took place and the daughter-in-law comes in, they become part of the family, and that too, since they follow the faith of the family, so they are part of the family. So this is basically the concept behind joint Hindu family. Why the similar term has not taken in Income Tax Act? Because when we talk about the joint Hindu family, so joint Hindu family means even the person in the if a unborn child in the womb of the mother is also part of joint Hindu family. However, the similar concept is not there in HUF. So there are slight differences. I can say the hairline differences. Due to this, the terminology used in the Income Tax Act is not similar, which is used in the Hindu law, number one. Number two, that is why the reference in the Income Tax Act has not been given for the purpose of taking understanding or taking the definition or borrow the definition from the Hindu law. So that is the reason. Co-parcenary. This is the very common term which we generally discuss when we talk about the HUF. So to simply understand this term is, when we talk about the co-parcenary means a person who has a right to share, right to receive the share in the family. So let's take a simple example, understand it in such a manner that Dhirubhai is there, and Dhirubhai has two sons, Mukesh Ambani and Anil Ambani. And since whether these two can be considered as co-parcenary, yes, these two are considered as co-parcenary. And what about the family members of Mukesh Ambani and Anil Ambani? Instead, they are member of the family, but they are not considered as co-parcenary. Means the person who has right to take the share in the family or the assets of the family is considered as co-parcenary. So to understand in a different manner, so assuming a family is there, and that family has a property also. Since the property is there, and assuming the income, the property has some income, so and that family has 4 brothers. So the income is to be divided in 4 brothers. Assuming first brother has 3 children and the second brother has 2 children, then it will be divided again in the 4 main heads, that is the 4 brothers, and the first brother will share his asset or his income into his family. So that is they are also the member of the family, but they are not co-parcenary. So this is a simple way to understand. However, the court has given this 6 essential characteristics through which you can understand that who can be co-parcenary and what is the rights and duties of the co-parcenaries, whether they are also eligible to take the part of that partitioned assets or not, whether the income is to be passed through to them also or not. So there are a few questions, but the court has categorically said that these 6 essential characteristics should be there to consider as a person to become the Hindu co-parcenary. So creation of HUF, we already discussed that while creating a HUF, it is not necessary that the document should be there, but for the purpose of, as we all know, that how to prove that yes, we are HUF. So for this purpose, a document is required. Assuming if I am Sachin Sinha, so for this purpose, I need to prove that, and to prove myself that yes, I am Sachin Sinha, I need some document like Aadhaar card, PAN card, etc. Otherwise, it is not required to prove myself that I am Sachin Sinha. So similarly, if HUF is there and if it is doing working, it is not required to be substantiated by any document. But as I mentioned, that when you go for obtaining a PAN card or obtaining a bank account, opening a bank account or getting registered with the GST law, so for this purpose they ask for the document. And of course, during the assessment, the officer will say, provide the document to consider you as a HUF. Then you have to provide these documents. So for this purpose, actually it is required. Otherwise, HUF is created by its own, and it is not required to have a document support in it. Now, again, while discussing this HUF part, a very good question came from my team, that can only the women of the family create HUF? So this again a very good question, because generally what happened, we consider a husband and wife, or the family member consists of male members and female members. So generally what we have seen, that the male members can create HUF. So whether female members can also create HUF, because they are also Hindu, they are also part of the family, can they do so? So law says no. Hindu undivided family cannot be created by women of the family only. So whether women can be karta of the family? So yes, women can be karta of the family when the male member dies, or male member is no more there for handling the affair of the family. Then the women can be karta of the family. There are so many examples which can be seen, and but now the question arises that whether the female can be, since as I given the example that female, if all the females are there, they cannot create HUF. But if it was already created and the karta, who is a male member, now no more or with the family by any reason, so whether the female can continue that business HUF? Yes, in that case, the women of the family can continue that HUF. So the law doesn't bar about that, but they put the bar that a female Hindu cannot create by agreement with other female HUF. Now come to the very important segment of this discussion, that asset of the HUF. Whether asset is actually required to create an HUF. This, if you think about this, so law doesn't say anything about having an asset for the purpose of HUF. But the question arises, if the asset is not there, of course the income would not be there. So income would not be there, then why you're talking about in the Income Tax Act about the HUF? So for the purpose of understanding the HUF concept, of course the income must be there. Then and if the income is there and the income is coming from either by property or by investment, so of course for the purpose of having HUF business, there must be something which is called assets. But otherwise there is no precondition to have an asset in the family to create a HUF. Now the question arises, whether HUF can be created without having a property. So yes, HUF can be created without having a property, and subsequently the member of the family can put their asset in the HUF. So the question arises, because since we are discussing about the asset of the family, so HUF usually has asset, because if there is no asset, no income. So how the asset came to the HUF? So the asset came from the ancestral property or from the property given by the member, either by gift or by will or by any source, into the common pool of the family. So by this way, the property comes to the HUF. So from that income that they maintain the family members, or the other income, through that income can be distributed to the family members. So ancestral property, because as a pooling, as I mentioned in my slide, that the ancestral property can also be part of HUF. So what is ancestral property? So it is already defined in the, not in the Income Tax Act, but in the Hindu law and the other law, that what is ancestral property. Then it's said that the three immediate male ancestors. So if you see everywhere they put the thrust on the male person. So but it means that the immediate three ancestors can be considered as the ancestor. The property came from that source. It can be considered as ancestral property. So does it mean that they have acquired that property, or whether the inherited any property which is inherited to them and then it came downward, then it can also be said as ancestral property. So yes, anything which either came from their ancestors to them and then it passed to the next generation, or either it is being created by them and then passed to the next generation. In both the cases, it is considered as ancestral property. So there are a few understandings and examples are given there. So HUF property gifted to a daughter. So this is very important to understand, that whether daughter is also part of HUF. So yes, unmarried daughters are also part of HUF. So what about the daughter who has got married? So they say once she got married, then they become part of the another family, and now she is not part of this family. So while we constitute, we say that the male members of the family and the daughters, unmarried daughters, and the female members of the family are considered as the members of the HUF. So if HUF gift the property to the daughter, so yes, until she has got married, they have full right on the property of the HUF. So property obtained by daughter from joint family she has absolute right. So any income therefrom is chargeable to tax in her hand, because she has the property which is given to them or gifted to them. Then it becomes her property, and since it is her property, the income can be taxed in her hand. So this will also apply to the legal heir obtaining a property in the capacity of descendant. So anyway, the property, if it is transferred from the HUF to another person or the member of the family, then it is no more the asset of the family HUF, and then become the asset of the person who have received that property, and any income from that property will be considered as his income or her income, as the case may be, and the tax should be paid by him or her as accordingly. So this is again a very important judgment in case of Calcutta High Court, and that is regarding the Aditya Birla HUF. So Basant Kumar Aditya Vikram Birla HUF was there, and they gifted the property or jewelry at the time of marriage of the daughter of the family, and considered it as an expenditure. That gift considered as an expenditure of HUF. The AO said, no, this is not expenditure, because you have gifted the property, and that to the married daughter. So this will not be allowed. So the court has a very good observation in it, because the client has given the plea that we have given the property to the daughter when she was not married, and on her marriage we have given this. So it is not after the marriage. So it will not be it cannot be said that the property given to a married daughter. So the Calcutta High Court has upheld the SSC's contention on the ground that being an unmarried daughter of the family, the daughter has the right to have the expenses of her marriage incurred out of the joint family fund. So this is now if you see there are so many marriages or big budget marriages are there. So the question arises from whether you have incurred such expenses out of your income, or any expenditure what you have incurred, is this appropriate to your income. So in that case, it is an advisable idea. Just have a HUF, create some fund in that, try to put something in that, make some investment through that HUF, and you can at a time of daughter's marriage or at a time of a son's education, you can use that fund. So that will not that can be considered as a planning tool for the purpose of as far as concerned with taxation. This we have just discussed, that can HUF be created without any property. So this is, we have just discussed that yes, it can be created without any property. It is not necessary that the property should be there, but a basic thought is there. When the person are living together, getting income, unless there is an income, the family will not survive. Whether the source of income is from the HUF, so that can be planned accordingly, that yes, we can create HUF, put some fund from the members, and we can invest, and the HUF will invest that fund in other investment ventures, and then the HUF will earn their own income, and now for the purpose of tax planning, that can be done. This is again a very important tool, because as I mentioned, that without understanding discussing the income tax for the purpose of HUF, it will not be complete. And when we are talking about any category of person, so the residential status of the person is very important for the purpose of taxation. So residential status is, as you know, that it is already in section 6. Section 6.3, I think it is about section 6.2, it is about HUF and AOP BOI. So the question arises, how to test the residential status of the HUF. So for the purpose of understanding the residential status of HUF, so whether the Karta's residential status is important or it is not important. So when we start discussing on this, so we came to the conclusion that, see, what is important is the control and management of the affairs. Control and management of its affairs is wholly situated outside India. Then it would be said that it is a non-resident, otherwise it will be resident. So 3-4 important terms is the control and management. When it can be said that the control and management, where is control and management? And that too, the control and management should go everywhere together, or it can be in the different hands. So it can be said that yes, control and management can be in 2 different hands. So in that case, how to determine the residential status of the HUF? So this is again where you can plan that if the person who is managing the affair is outside India, but if he came to India for some time and took some important decisions, or then it can be said that it is a resident of India. But assuming a situation where the family has a business outside India, and if they become resident, then the global income would be taxable in India, then they want to plan in such a manner that it should be a resident outside India, then you can think in such a manner that the control and management, the person who is having the control and management of its affairs, he is outside India, then it can be said that the status of the HUF is a non-resident. So what is the role of Karta in this? Whether the Karta has all the control and management. So it's a general understanding that yes, Karta has all the control and management, but it is not actually necessary. So it may so happen that the father is the Karta of the family, but the sons are managing the affairs of the family. In that case, it will be said that the sons has the control and management, and the father is Karta. Now, if assuming we've decided that okay, he is a resident, so how to determine whether the resident and not ordinary resident concept would apply equally in this case also? So yes, section 6 subsection 6 also applies in case of non-resident. And while discussing about the non-resident, says that if the manager, the term used in the section 6 of section 6 is if the manager stays in India for 9 out of 10 years and 7 out of 730 days within 7 years. So similar to individual, but the difference is while determining resident and not ordinary resident, then you use the term manager. But while determining what is the status of what is the residential status, then you use the term control and affair of its control and management of its affairs. So these two are absolutely two different terms, and so for this purpose, it can go into the litigation about the residential status, but it can be used as a planning tool and as well as the opportunity. So as I mentioned in this slide in the third bullet, that the residential status of Karta of the family during the previous year is not relevant. Exemption of income. So why to create HUF? Because any income came to the members of the family from the HUF is exempt. Okay. So if it is exempt in the hands of the member, so whether it is taxable in the hands of HUF, yes, it is taxable in the hands of HUF. Then what is the planning sense in it? So planning sense is assuming I am an individual having my family, and apart from and I create an HUF, I put some property in that HUF, and that property is giving income. And that for that income, there is also a threshold of 2.5 lakhs and other investment of ATC deductions are also available. So that can also be planned in that manner that the tax liability can be reduced in both the hands. Now the question will come to your mind: what about the planning? What about the clubbing in that case? So we'll discuss about the clubbing in a subsequent slide. So as far as concerned to the exemption, yes, it is exempt. So section 10 subsection 2 says any income received by an individual as a member of HUF, where such sum has been paid out of the income of the family, impartable asset, so it is exempt. Now the question arises. So as like I've given an example that we have created an HUF. Now I want to put my property in that HUF. So whether it is taxable, so whether this is transfer or not. So first question, since one person is transferring asset to another person, so whether this will be part of considered for the purpose of capital gain. So the question arises, first of all, test whether it is transfer or not. So to test whether it is transfer or not, section 47 clause 3 says any transfer of capital asset under a gift or a will or on irrevocable trust is not considered as transfer. So if you give the asset irrevocable, then it will not be considered as transfer. Since it is not considered as transfer, because let's take a simple example. I have a property, and in my family, wife and my son, my daughter is there. So while as I understand that my property will anyway subsequently pass to them, so why not create a HUF and put that property in HUF and irrevocable? Then of course, whatever income it is creating, it will give. It will utilize for the purpose of their betterment, and it will not be the income what it will earn. It will not be clubbed in my hand. So that is another aspect. But for the purpose of transfer, yes, it can be used, and it will not be considered as transfer, and capital gain can be avoided in this case. So another aspect is whether 56(2)(10) will also be applicable in this case or not. So section 56(2)(10) is very important, and if you see any person who receives any property and that too without any consideration or the consideration which is inadequate, then it says that it will be taxable in the hands of the receiver. Now the question arises, the HUF is receiving my property, so whether it will be considered as income in his hand. So it is discussed in detail that whenever a person who is transferring the property, that to irrevocably, first of all, he avoided by this planning, he avoided the capital gain tax. Now, since he is transferring this property, it means the HUF is receiving from a relative. So again, it gives a very important aspect that whether in this individual and HUF are a relative. So if you see a relative in the definition of relative, which is given in section 5, section 56(2)(7, so it is not mentioned in the list of relative. In various judgment, it is considered that yes, it is the person who is transferring the property and the person and the HUF are considered as relative, and since it is transferred from relative to relative, So it is out of the ambit of section 56(2)(10). Because 56(2)(10) specifically says, so any property received from a family member is out of the ambit of 56(2)(10). So another situation, transfer of property by HUF. So first we understood transfer of property by individual to HUF. Now we understand transfer of property by HUF. So HUF has a property. Now HUF wants to transfer that property to its members. So whether capital gain tax will apply or not. So any transfer of capital asset on the total or partial partition of HUF is not considered as transfer. So it is coming basically from one hand to another hand. So it is not considered as transfer. Since it is not considered as transfer, so no question of capital gain. So again, in the vice versa transaction also, the capital gain can be avoided. Now, what we have discussed earlier also, that whether clubbing provisions is applicable in case of transfer, in case of income from the HUF, and since the person who is Karta or the main person of the family has transferred his own property into HUF, just for the purpose of tax planning, that okay, whatever income will come, that will be taxable in their hand and not in the hands of not in my hand. So my income will be taxed at a different rate, and remaining the income will be taxed at a different rate. So this can be used as planning tool. So Income Tax Act specifically says income of HUF from property converted by the individual into HUF property is for the purpose of capital gain, for the purpose of clubbing, the benefit is not available. Income is included in the hands of the individual and not in the hands of HUF. So clubbing applicable even if it is converted subsequently. It means the property which is given in the kitty of HUF and subsequently distributed to the all family members. So this is again a planning tool. Transfer the property to the HUF, and actually you want to transfer the property to the member of the family. So create HUF, transfer the property, and then distribute. So it can, if it is distributed amongst the members, so no question of capital gain is there. So by this way you can actually do the planning. But for the purpose of clubbing of income, this benefit is not available because section 64(2) is basically for the purpose of this to curbing this type of transaction. So clubbing applicable even if the converted property is subsequently partitioned or income derived by the spouse of such converted property will be taxable in the hands of the individual. Then the question arises, then what is the benefit of transferring this property to HUF? Whether only the intention is to save the capital gain? No. Then the idea is to generate income and do the tax planning so that the income more income can be generated. So it can be done by this manner, that you put some money in the family, or if you put since you have done the irrevocable transfer, and you in the deed you have mentioned that whatever they are free to use by whatever they way they want to use. So subsequently, and if you assuming a situation where you transfer some money in the kitty of the HUF, and then HUF invested the money, then it can be said that since it is invested by the HUF and not invested by me, and I'm not only transferring the income, I have already transferred the asset, and that asset is generating the income, and not I am not generating any income, so it cannot be considered as the clubbing provisions should not be applied. So that can be one of the argument, but that can be used as a planning tool by taking up abandoned caution. So deductible expenditure, of course, if you are carrying on any business, so HUF is carrying on business, then the question arises whether the expenditure of the HUF is deductible. It is deductible. So other expenditure is deductible, but whether the question arises whether any payment made to Karta or the member of the family, whether it is also deductible, because it is basically from one hand to another hand. So whether it is also deductible. So there are three basic conditions which says that it is paid under the valid and bona fide agreement. Of course, that should be there. In the interest of an expedient of the business of the family, because if the intention is not there, then then whatever you are giving is basically not matching with the expenditure. And the third, which is very important, that reasonable and not excessive. So if you see, it contains basically everything which says that payment should be bona fide and that is for the purpose of business and that is reasonable and not excessive. So if these conditions are there, it can be said that whatever is given to the member of the family is not is for the purpose of his service, what he is rendering to the HUF. So that should not be so that should be allowed as a deductible expenditure. Now the question arises, so whether the family member or the Karta has received something as a remuneration, whether it will be taxed in his hand. So yes, since it is a non-tax paid income, so it will be taxed in the hands of Karta or the family member who received that money. This is very important segment, because partition, when we create anything, we know at the end there is always an end of everything. So partition, this is again used as a planning tool, when to do the partition, how to do the partition, whether full partition is required or the partial partition is required. But for the purpose of income tax, let me make it clear that they did not consider partial partition. So what is partial partition? That is again an important question which came to our mind. So while discussing partial partition, so assuming the property out of the whole of the property of the HUF, you have partitioned few properties. You have partitioned few properties, then still HUF is continuing and it is partial partition. Or some of the members are now discontinuing to become the member of the family. So either by part partition of the family or by part partition of the member is basically the partial partition. So if it is partial partition, then the income tax says, forget, we don't know partial partition, we will only consider if it is a full partition. So for the purpose of, as far as concerned to Income Tax Act, they did not recognize the partial partition concept. So whenever you advise to your client, be very careful. So whether partial partition is required or the full partition is required, because while partial partition is required, income tax will not consider it as a partition. Then what would be the situation? Whether the property which has gone out of the HUF, whether that will also be considered as the part of the HUF even after the partition, or whatever gone, whatever the property which has gone, that is not considered as part of the HUF. Similarly, the member who are now not continuing as a member of the HUF, they will, for the purpose of income tax, they will consider as the member of the family. So Income Tax Act says, I don't care. So whether you are partial partition, so it means whether the asset is partitioned or the few of the family members partition, income tax says all the members, all the assets which are earlier in the HUF will be continued for the purpose of assessment, and any income or any income came from that property will be part of the HUF, and they will not allowed to take any exemption for that part. So it is important how to plan and when to plan about the partial partition and full partition. So total and complete partition, as the name suggests, when you are parting everything from the HUF, that means all the properties ceases to be the properties of the HUF. It means all the properties has distributed amongst the members of the family. Then it can be said that it is the HUF is now not in existence and that there is complete partition. So if this is the situation, then you have to report to the income tax office. Number one. Number two, while filing income tax return, mention this fact also, because there will be two assessments. One, up to the date of partition as a HUF, subsequently in the hands of the members, because the asset is there, although not part of HUF, it is still there. It may still earning or generating income. So of course the income would be there. So that will be segregated in that manner for the purpose of income tax. And that too, income tax officer has to be satisfied about the complete partition. So you have to present all the facts and evidences before the assessing officer to make him satisfied that, see, there is complete partition has taken place and now the HUF is no more in existence. So please do not continue your assessment as an HUF. So this is very important role of the tax practitioners while handling the assessment of the HUF which has taken a complete partition. If it is continuing as a HUF, then there is no challenge, because the most of the provisions which is applicable to the individual, that will apply in the hands of HUF also. And since it will the similar more or less similar provisions, I think the assessment what we are handling as an individual, that will apply. Only exception is 10(2), where the income is exempt, the residential status. This is again a very important concept. Although I have put it in my slide at the later stage, but since while I was going through the complete provision of HUF, a situation came to my mind. Can I be a member of multiple HUF? So take a simple example. I am member of my father's HUF, where my father is Karta. Can I create my HUF with my family, my wife, my daughter, my son? Can I create another HUF? So this is again a important aspect of understanding. So if this is so, then one person can create multiple HUFs. So the section 179 actually tried to curb such type of situation, because this was the practice while by planning in such manner. In one case, I am a member of my father's HUF. In another case, I am a member of my brother's HUF. I have created my own HUF, and by this, I'm doing the planning of taking the exemption and the deduction of around 5 lakh rupees in every year. So this was the case. So they introduced section 170(19) and I took up this. But it can be possible that one person can be member of 2 HUF or 1 or more HUF, and at the same time, he can also be Karta of 1 or more HUF. So take a simple example. What I have given in this, it is possible to have a separate HUF with father, where my father is Karta, and another with my family, my wife, my son, my daughter, where I am Karta. So it is possible. So section 179 for the purpose of 171 subsection 9 for the purpose of income tax is no, but Hindu law or Hindu Succession Act doesn't bar about such a situation, so it can be created. This is again an interesting aspect, that whether Karta of 2, if one person be Karta of more than 1 HUF? So generally not, but there may be a situation where a Karta can be HUF more than 1 family. So when this type of situation will arise? So such type of situation will arise when assuming a person who is I am member of 1 HUF and I am Karta of my own HUF, but unfortunately the main member of that family dies, or now he is no more, and to take his position I become Karta of that family. So that in that case only the person can be become Karta of 2 HUF. So return of HUF, what we have discussed is for the it is not separate than individual. So wherever individual is there, more or less HUF is there, except the income of the salary income would not be there in case of HUF. Because it is generally for the purpose of carrying on business or rental income or the capital gain income. So assessment of HUF, as we discussed, because while doing assessment of HUF, it is again a tricky part, because the partition, non-partition, and transfer of income of the family to in the hands of the member. So taxation in the hands of the family, what are the exemptions which are eligible, that HUF is eligible to take, and what are the deductions which the HUF is eligible to take, capital gain taxation. So any question, because I have already done with my presentation. So if there is any question, I'm ready to take it.
Yeah. Thank you very much, Sachin, for such an enlightening and a granular explanation of the entire HUF scenario. It was really very informative, Sachin, to be very honest. So there are a few questions which I would like to take up. Almost there are 10 questions, but I'll just club them, which are more important ones. What is the procedure to create a HUF deed? What are the contents future member position in HUF deeds?
Okay, so basically you want to ask what is the procedure to create an HUF?
Yeah, and what are the contents in that?
Okay, so basically, see, the important thing, whether any objective is required to create HUF, like partnership firm, of course, there is actually objective, and there are some parameters like the profit would be shared in such a manner, the remuneration would be given to the partners in such a manner. So whether these contents are required for the purpose of HUF creation, so these are basically not required. And as I mentioned in my earlier slide, that see, HUF is basically created by its own and not by way of document. But why we create, that is for the purpose of assessment, that is for the purpose of obtaining PAN number, GST registration, etc. So whatever arrangement you have with the other family members, just put it in fact in detail to avoid any litigation in future courts. So this is a very important role for the practitioners to play while creating HUF, because there is no such set rule or pointers to be put in creation of HUF. But the important thing is put all the points through which you can avoid the litigation in future courts.
Okay, fair enough. Second question is, can birth of a daughter, not son, create HUF after amendments?
See, birth of daughter, because assuming a situation, because me, my wife, and daughter. So since there is one male member, HUF can be created. So it is not necessary that for creation of HUF, more than one male member is required. So one male member can create HUF with his family also. It may so happen that the other members are female.
Third question is, how to partition HUF, and to add to it, should it be registered?
So for partition of HUF, since you have already documented for that time of creation, and while creating, you must have put it some points regarding the partition, because when the partition will take place, how it will be distributed. So this is the distribution module basically to avoid the litigation, as I mentioned. Now the question arises about the taxation part. So on the partition, at the time of partition, whatever asset goes to the family member that will not part of no capital gain will arise, and after partition, any income arisen from that asset will be considered as the income of that individual only. But the important thing is, when you do this partition, please make sure that all the partition related points are also considered at the time of creation. Because as I mentioned, certainly, because as you know, 3 or 4 members in the family, it may so happen, and you are carrying on business jointly, so it may so happen that litigation would arise. So to avoid that situation, it is important to put all the facts in the memorandum or the deed, so that yes, so that everyone should be agree at the time of distribution. In this manner, the distribution will take place.
And the extension to that question, should it be registered, Sachin?
So as far as concerned, as I mentioned earlier, that it is not required to be documented anywhere. But for the purpose of income tax, for the purpose of GST, for the purpose of bank, yes, it is required to be documented. Since it is documented, it is not required to be registered, but it is required to be notarized as a deed, so that it could have some value at the court of law.
The next question is a bit lengthy one. A member of HUF is converted into either Muslim or Christian religion. Whether he or his family member entitled to assets of HUF existing at the time of conversion?
So if there is HUF and the family member, there are few family members of the family are member of this HUF. Now, out of this, assuming 2% converted themselves as a Muslim. So whether they will continue as a member of the family or not, this is the, I think this is the question. So the moment they become, they are not following the faith of Hinduism, because if you're a Muslim, you cannot be member of a family. So to my mind, because I'm not sure about this answer, but to my mind, they cannot be continued as a member of the family. But I need to check this once again, because this is a tricky part.
The same question, Sachin, whether he or his family member entitled to asset of HUF existing at the time of conversion. So will they be entitled to the asset at the time of conversion?
So the moment you converted yourself, it doesn't mean that your all right will go off in one go. So of course, whatever right you have at the time of creation, it will be there. But of course, whether you continue as a member of that family or not, of course, that needs to be checked. But if, assuming you are not, you will not be able to continue as a member because you are now no more considered as Hindu. So of course, whatever asset the HUF has, which belongs to your part, so that will be given to you. But the HUF will continue, and because it will be considered as partial partition, and the HUF will continue, and the assessment will be take place as it is.
Next question is how a newborn child will be added as a member of HUF if HUF is already created before the birth of the child?
Okay, so as you know that in Hindu law, the moment the person take birth, so it becomes member of the family. So it is not necessary to add him with the document
by birth. Yeah,
by birth. So it is not necessary. Assuming we have four brothers and father created an HUF, and subsequently 4 brothers got married and they have children. So of course they will consider as a member of the family, but the co-partioner will be only these 4 persons and the father, not others.
Next question is, if a HUF wants to contribute to PPF of its members, then how is it to be presented in statement of affairs? And also when it is matured, what is the treatment?
So HUF can invest in PPF, and ATC deduction is also available in this case. ATC deduction is also available in this case. Now the question arises, they want to invest it in the name of the members or in the name of HUF?
They want to contribute to the PPF to its members.
Okay.
It wants to contribute to PPF of its members.
So
and then how is it to be presented in the statement of affairs?
So if the HUF is investing in the name of the member, so it means they have given that money to the member, and now it is not invested in the name of HUF. So I think it will not appear as an investment in the under the head investment in the hands of HUF. It will be considered as the asset of the person to whom it is given.
The member. Yeah.
And any income arising from there, that will be income of that person or that member, and not the income of HUF.
Next question is, can unmarried female member become member of HUF with his Karta brother for joint property?
So unmarried daughter, sorry sir, I missed your question.
Yeah, I'll repeat the question. Can unmarried female member become member of HUF with his Karta brother for joint property?
Okay. So I think recent judgment of Supreme Court, where the Honorable Court has said that the married daughter has also right in the property. So this is one situation. So your question is basically related to unmarried daughter. So if unmarried daughter and the brother can create HUF with her brother. So yes, they are part of one family. They are descendant of one family, and they can create HUF. It means these 2 persons can create HUF.
It's possible. Yeah.
Yes, sir.
The next question: if only female members remain, how it can be dissolved and assets distributed? Okay,
so this is related to the slide what we have discussed earlier. So if the female members are only female members are there, so they are member of the family. So they are not co-partitionary. but they are member of the family. So all the assets is to be distributed amongst the members, because now no co-partition is there. So that will be distributed amongst the member, and the full partition, complete partition should take place. And as I mentioned earlier, that they can continue it as a HUF. They can continue as a HUF, but if they want to close it or by way of complete partition, they can do so, and all the members will get the share as mentioned in the agreement. Because the male members are not there, so the agreement is to be read in context of the remaining female members.
Question is, what may be the best planning through gift to the daughter-in-law as well as to son-in-law before marriage? This is more related to planning.
Sir, it would be a risky proposition because gifting before marriage is always a risky proposition, and even nowadays, gifting after marriage is also a risky proposition.
Okay. The next question is, gift from whom can be taken to exemptions of income tax in HUF? A person can gift in kind to daughter, son for their HUF?
So let's take a simple example. I created HUF and I am putting my property in the HUF, and that is irrevocable. Then it can be said that I am relative of the HUF. So for the purpose of section 56, that can be, that will not form, so taxation is not there. And for the purpose of capital gain also, since I am putting my property, so transfer from one hand to another hand, although considered as legal entity for the purpose of income tax, but the capital gain is not there. So specific exemption is there in section 47, subsection 3.
I think that's about all, Sachin. You answered all the questions so far that have been asked by the participant, and a really very informative session. Let me give you a hearty vote of thanks and a virtual round of applause for this session. And I'm sure our participant must have definitely gained out of this, I would say, very granular presentation what you gave, Sachin. Thank you once again for your time and efforts, and we really appreciate it.
Thank you so much, sir. I'd like to say thank you to Chanda ma'am also, because she is the person who is in connection with us regularly, and the technical team of ICI. Thank you so much to all. Thank you so much.
Okay.
Thank you so much, sir, for your valuable time. Thank you, Jabir sir. Thank you, Sachin sir. And thank you, Arun sir, for your...
Thank you so much.
Thank you. Hello.